Okay, at this point, we're going to turn to our panel of experts and listen to them and their views on the state's approach to the current issues. But before we get started, I would certainly like to introduce our four panelists. Immediately to my right is Gregg Erickson, who has an extensive experience in policy issues impacting Alaska, including helping draft constitutional amendments, establishing the Alaska Permanent Fund, and overhauling the state's oil tax policies. He has served under two governors as the state's senior economist. After leaving state government, Erickson found the Alaska Budget Report and routinely writes articles and papers on resources, public finance, and fiscal issues. Next to Gregg is Brad Keithley, who is the president of Keithley Consulting, LLC, an Alaskan-based firm focused on oil, gas, and fiscal policy consultancy, and was founded in 2013. He also publishes the blog, Thoughts on Alaska Oil and Gas, and is the founder of Alaskans for Sustainable Budgets. Keithley is a board member of the Institute of the North and regularly co-chairs the Law Seminar International's annual conference on energy in Alaska. He served as a member of the Alaska House Sustainable Education Task Force from 2013 to 2014. Larry Persily has recently concluded 5 years as the federal coordinator for the Alaska North Slope natural gas pipeline projects, and now works on oil and gas and state fiscal and tax issues for the Kenai Peninsula Borough. Persily worked on Alaska oil and gas issues for 3 governors and the state legislature. He also served as deputy commissioner at the Department of Revenue and later worked in the governor's Washington, D.C. office on oil and gas, tax, and transportation issues. Before joining government, Persily worked as a journalist in Alaska. And finally, Jim Calvin is the managing principal with McDowell Group and the firm's senior economic analyst. His specialties include economic and socioeconomic impact analyses, cost-benefit analyses, business feasibility studies, community economic planning, and local, regional, and statewide economic profiles. Calvin has a master's in mineral economics from the University of Fairbanks and earned his undergraduate degree from Western Washington University. So, gentlemen, we're going to start in the order of, as you're sitting, we're going to start with Gregg, move to Brad, Larry, and finally Jim. We're going to be giving you, to start with, each of you 10 minutes to speak. And we'd like to hear your views on the budget situation as you've heard them presented. And we are also very interested in your views of the impact on Juneau and Southeast Alaska. And I do happen to know that this is not a shy group. And so I don't think I have to encourage you, but I will to say if you want to interact with each other, certainly direct questions to Director Pitney, who's now hiding in the front row. That's certainly encouraged. And we have a few extra minutes, so I'll probably flag you when you are close to your 10 minutes to make sure everybody gets their time. But I think we can appreciate the conversation as it goes back and forth. So at that point, I'd like to ask Mr. Erickson to start the conversation.
Thank you. I've discovered over the last several months that purveying a message of hard times is not particularly a popular thing to do. And it's true, even though almost everyone now accepts the notion that some sort of hard times are ahead for Alaska in general and Juneau in particular. But there are a couple of serious, in my opinion, serious misapprehensions about these hard times. One of those misapprehensions is that the coming difficulty is principally a fiscal problem. You can certainly look at it that way, and I guess there's nothing wrong with looking at it that way, but to me, it's much more helpful to think of it as this fiscal problem as a symptom of a much more fundamental underlying economic problem. And that economic problem is what Alaskans produce and purvey and sell to the rest of the world doesn't have enough value to support the population and jobs that we have in this state. And unless that changes dramatically, which of course it could, Alaska is going to be a place with fewer people and fewer jobs. And the sooner we plan for that, the better off we'll likely be. A lot of people say, Greg, you're a glasses half empty guy. You should be encouraging us. You should be positive because that encourages people to invest and that'll help the economy. Well, I'm an economist. That's not my job. That's never been my job. And that's the way I'm telling it the way I think it is, and you can take it or leave it. The other problem is that the hard times will be similar or possibly even less severe than previous Alaska recessions. Carolyn Schultz with the Department of Labor wrote a very excellent article in the Economic Trends this last month that puts to rest, I think, the notion that these recessions are similar to the recession we're in right now and that is deepening right now is similar to those in the past. It's not. And I won't go into too much detail about that. But the big difference of this recession is it's a fundamental decline in the value of what we sell to the rest of the world, which is usually what happens in regional recessions. It's not like the recession of the 80s where we had basically a state spending bubble. It's not like the recession of 1977, 78 where we had a huge construction project that wound up. It's not like the recession of 2008 where we were really just the tail end getting the fallout from a national recession. Alaska remains the one-trick pony. One trick is all that horse can do. He does one trick only, and that's the principal source of his revenue. And we all know that. But economist Scott Goldsmith has quantified that. State spending of oil revenue, he estimates, accounts for 31% of Alaska's jobs. Spin-off jobs from oil wealth, about 16%, and oil industry jobs themselves, about 3%. Now, Mr. Keithley will probably tell you, or may tell you, I guess I shouldn't anticipate him, that we're in a trough right now. And that may be so, but if we're not in a trough, as so many other people seem to think, a lot of these jobs are going to go away. Maybe not soon, but eventually. And we in Alaska should be planning for that. Now, we have tried to deal with this concentration of our economy for 40 years. The standard political proposition in Alaska has been to diversify our economy and escape our dependence on a single resource. We need large-scale investments. Large-scale investments in, well, take your pick. I'll give you a chance to look at that list, and we'll come back to it maybe if you want. There's a lot of other things we could add to it. It's a diversification strategy that has not worked. Let me say it again. It has not worked. And yet we continue to pursue that strategy and continue to voice the rhetoric, in my view, the empty rhetoric of the notion that we can somehow redeploy our financial assets from our oil in a way that effectively and efficiently diversifies our economy. I'll skip over some of the details of Alaska's prior recessions because I think that's been covered perhaps. What we're seeing now is not like the prior recessions. It's if things unfold as I expect, and if we don't get bailed out by some bolt from the blue, which you got to admit has happened a lot of times in Alaska's history. And economists who sort of look at what the history says should pay more attention to the fact that a huge exodus of Alaskans in World War I. People don't really think about that. The Depression in the later years from 1935-36 onward was actually good for Alaska because the public programs created a lot of employment in Alaska's tiny economy. In 1939, nobody thought that Alaska's economy would blossom as a consequence of World War II. But a year later, it was clear that that was happening. And Hundreds of thousands of people cycled through Alaska in World War II. And many of them, not maybe a small percentage, but many in absolute numbers, came back to Alaska in the 40s or in the late 40s, when Alaska's fisheries industry was totally on the ropes. We had no oil and gas. Mining was dead because the price of gold had been pegged at $36 an ounce. And yet the economy blossomed until about 1949. It ran out of steam again. And then we had the Cold War. Korea got invaded by the North Koreans, and the military in Alaska, or military in Washington, D.C., decided that it was time to rebuild the military institutions in Alaska. And that brought a huge influx of military spending, which remains a very important part of Alaska's economy. So, and we can go further forward. The Great Alaska Earthquake resulted in an infusion of federal funds into Alaska's economy in 1965 that would be equivalent to about $5 billion in today's dollars. Huge amount, over $600 million in 1965 dollars. So, this bolt from the blue can happen, but if it doesn't happen, we face the principal economic problem that what Alaska produces and sells to the rest of the world is not sufficient to support our population and our jobs. Combined with the fact that our principal export product is worth so much less and the volume of it is declining, and incidentally, Pat was talking about 500,000 barrels a day. For the last several months, we've been down well below 500,000 barrels a day. And we always have lower production during the summer as people do maintenance, but it's lower than it was last summer. I think we're not seeing any significant increase in oil production that we had hoped for. But we got a lot of other sort of bad things happening in this perfect economic storm. The potential for a shrinking military. We've heard about the cuts in Elmendorf, Fort Rich. Fortunately, the F-22s are helping Fairbanks, which is the community probably most dependent on military. But the military is going to cut 200,000 staff in the next couple of years if they follow the plans that they've published and announced. That's not going to leave Alaska unscathed. Of course, we could get into a hot war with Russia or something, and that could change another bolt from the blue. But if we look at what is on this table right now as plans, there's going to be additional cuts. We have some other industries in Alaska besides oil. We have mining and fisheries, but the strong dollar, which has been appreciating dramatically now for 3 years, has made our fisheries products twice as expensive in China and Japan as they were 2-3 years ago. And the slowdown in the Chinese economy, which is creating shockwaves around the world, is not a helpful sign for Alaska's fishery and mineral industries. And finally, we have declining federal civilian employment. Federal employment in Alaska has declined at an annual rate of 4% a year for the last 4 years. Total federal civilian employment nationally has declined at only 1% a year. So Alaska's really been on the short end of that stick, and folks at the Department of Labor suggest that it's Forest Service primarily, which of course has impacted Alaska, or Southeast Alaska in particular. So let me skip over that one. Who said this? Maybe some of you have heard this before. Karen, I think, has heard this in Ketchikan. Anybody have an idea who said that? Well, I'll tell you. Attitudes change, and how quickly they change. There's, as I've noticed over the last few months, there's a real reluctance to accept this notion of hard times. It's politically dangerous. There's a risk of creating self-fulfilling prophecy, and it affects our credit ratings. And we all have personal stakes in the economic of Alaska, but I think the bottom line here is we've got a few things we can do. Focus on the economy, not the budget. The budget will solve itself, I think. We have an embarrassment of choices, as Pat has mentioned. Maximize the economic bang for the buck in our spending. We're doing that by cutting the capital budget. But a significant implication of that is there is no part of the budget that is more important to the economy than the permanent fund dividend. If you cut the dividend, you are maximizing impact on the economy. Maximize federal dollars. Plan for an Alaska and Juneau with fewer people. Preserve the existing infrastructure. Don't build new infrastructure. Try to prevent the deterioration of the infrastructure we have. That's all I have to say. I'm sorry.
Is this on? Can I do it from here? Great. So I have the distinction of being the only speaker who has been introduced by the prior two speakers who have told you what I'm going to tell you, and not in glowing terms, I would say. But let me tell you how, as I would tell you. You have in your hands, hopefully most of you, all of you, a yellow brochure that has the outline for this program and has a white insert. And all I'm going to tell you is really in two charts in those documents. In the yellow one on the inside front page, you'll see a chart that has a fit at the bottom of the inside front page that has a fish on it. And it says, it shows the unrestricted general fund, shows state spending going up, shows income staying flat across the bottom and using cash savings until they run out. And then it says the big empty area is bad. And then at the bottom in the fine print, I used to be a lawyer so I can read fine print. At the bottom, you'll see a note that says based on a graph by Scott Goldsmith. Well, you know what? That's not really Scott Goldsmith's graph. Scott Goldsmith's graph is on the white insert, if you look on that, at the top of the first page. And that graph shows unrestricted general funds over time, over the same period of time as the cute little yellow fishy chart on the left-hand page that goes out to 2040. It shows unrestricted general funds over the same period, but it layers in Alaska's opportunities. We're paying out oil and gas tax credits. Well, why are we paying them out? Because we want additional oil and gas production. And that's a layer that Scott adds on. We're pursuing and we're talking about creating money or setting aside money to invest in an LNG project, which I hope goes. Larry's been working on it long enough. He needs to deliver now. That is a great opportunity for Alaska. When you think about the volume, it's the equivalent. The LNG we're talking about is the equivalent of 500,000 barrels a day of oil. Now that's the barrel equivalent. It's not the equivalent in value. Unfortunately, LNG is worth less than oil. But it's a huge project and a huge opportunity for Alaska. And that's layered on. And then Pat talked about, see, I can go back now and refer to you instead of you telling them what I'm going to say. The last thing that layers on, Pat talked about our increasing income from money, from our money, earning money from our money, the investments that the Permanent Fund Corporation is making. And it's true, it's growing. And that's layered on. So when you look at Alaska going forward, it's not the yellow chart, the cute little yellow chart at the bottom of the first page that some would have you believe it is. It is, in fact, when you look at Scott Goldsmith's real work, it is the chart on the second page now, or on the white page. Now, what do we do with that? Now that we understand exactly what Goldsmith and others are saying is out there in the future, what do we do with that? Well, you'll notice a line through that chart on the first page, and then you look on the second, also through the top chart on the second page. That line is the sustainable budget number. Too often in Alaska, we spend a lot of time running from one side of the fiscal boat to the other side of the fiscal boat. It's really ironic. 2 years ago, I was labeled as Gregg's equivalent, Dr. Doomsday, because I said we were spending way too much. $8 billion in fiscal year 2013, way too much, way above our sustainable level. We needed to set aside some of that money for the situation that a lot of us then saw coming. Reduced oil production, reduced oil prices. But people at the time were saying, oh no, $8 billion, we can afford $8 billion, we can afford it several years going forward. The fact is we can't. We couldn't afford $8 billion then. We certainly can't afford $8 billion now. We could afford about $5 billion when people were spending $8 billion, but we can afford about $4.5 billion now. We don't need to be running from one side of the boat saying, oh God, we're here forever, to the other side of the boat saying it's doomsday forever, doing cute little charts, yellow little charts that don't take into account Alaska's future. So what I proposed 2 years ago and got castigated for, and what I'm proposing now, is we do a sustainable budget. We look at what our long-term revenues are, and we set our spending levels through that long-term revenue. We don't run from one side of the boat to the other. Now, when Pat says, and when Gregg says, I say there's a trough, what they're talking about is the dip that you're on the white sheet, the dip in the top chart that we're going through currently. If I'd gone back with this chart and shown 5 years in the past, as Pat did with some of her charts, you'd see a very high revenue level. Now we're seeing a low revenue level, but Alaska has always been a commodity-driven cyclical economy. And what we have to take into account is we have opportunities that, if they come to fruition, are going to deliver out there in the future. And we need to set in those bounds a sustainable amount. So that's the proposal that I see going forward, to continue on the plan that we should have been on 2 years ago. We should have been spending at sustainable levels then, as opposed to pumping out $8 billion and overheating the economy. We should be on a sustainable level now. We should work our way through the trough and get to the other side. And then we need to have fiscal discipline when we get to the other side and continue that continue that amount going forward. One of the problems that we had, and this is particularly true in the 2010 through 2014 timeframe, we just sort of went bananas in the 2010 through 2014 timeframe. One of the problems we have is we don't have the fiscal discipline when we have high revenues to set aside the amounts, the revenues that we're getting in excess of the sustainable spending level, sustainable revenue level, to set those aside for the times when we have down troughs. So as we go through this down trough, we need to just keep our heads about us. We need to keep the course. But then when we get to the other side, we need to make certain that we continue to have the fiscal discipline. All right, so there's a trough. How do I fill the trough? I fill the trough in two ways. One, I use the savings that we've built up over time, right? And that we need to refill when we get to the other side. One is the Constitutional Budget Reserve. We have about $7 billion left in that. The other is the accumulated amount we have in the earnings reserve in the permanent fund. Now, I know all of you in this audience know that, but just I will mention it. The permanent fund comes in different flavors, right? There's the corpus of the permanent fund that's inviolate under the Constitution, cannot be touched, cannot be spent, and none of us are advocating doing that. But there's also the earnings off the permanent fund that have accumulated over time and continue every year. And under the Constitution, the second sentence of the permanent fund constitutional provision, it says that those are subject to appropriation by the legislature. So how I fill the trough is use the Constitutional Budget Reserve and then use the accumulated earnings reserve, not at the detriment of the dividend. We keep the dividend the same way, but use the accumulated earnings reserve to help fill that trough and get to the other side. Now, there's a couple of things that you have to do as you do this. One is you have to remain vigilant. If you look at the chart on the bottom of the flip over page, on the white page, you see the line and then you see revenues below the line. The trough is much lower and doesn't get back up above the sustainable spending line. What's going on there is the gas line fails. We don't have the gas line revenues in that scenario. So we need to remain vigilant. And if we see the gas line not moving toward a situation where it's not going to be successful, then we need to redo the sustainable budget number and reset our expectations and look forward at the future we're going to have without the gas line. And the second thing we need to do is that we need to, as I said earlier, we need to remain vigilant and during high revenue cycles, as we did not do during the 2010 to 2014 timeframe, but frankly, as we did during the Murkowski administration, and as we did during parts of the Palin administration, we need to set aside excess revenues when we get to them and put them into savings so that when we hit troughs like this, in a cyclical, commodity-driven economy, when we hit troughs like this, that we have enough to fill it. One final word on taxes. I don't favor taxes. We're heading into a recession in this state. We're going to have reduced spending. We've been spending state spending's been at a high level. Oil industry's been at a high unemployment. We've had a bubble, essentially, as a result of high oil prices, both in the oil companies and into the and extending into the state government. We're going to, I think my time's up. We're going to hit a point where we're not going to be able to maintain that bubble. We're going to have to settle down. You don't, think about this for a second. If we're going into a recession, the last thing you want to do is reduce personal incomes, right? The last thing you want to do is take money out of the private economy, take money out of people's hands. That's what taxes do. That's what a sales tax would do. That's what an income tax would do. And that's what capping the PFD or reducing the PFD would do. It would take money out of individuals' hands. It would take money out of the private economy. That's not what you do when you're going into a recession. So I think if we go to the sustainable budget spending level, that we work through this trough, and that we have the tools to do it, and that we see the other side, we continue to remain vigilant about what's on the other side, and we adjust if we need to, and we don't use taxes in the meantime. Thank you.
Before I go into the notes that I prepared for this, I want to comment on taxes. I guess we just look at it differently. You look at taxes as taking money out of individuals' hands. I look at taxes as a way of paying for the community services that benefit everybody, and that's how government works. That's how communities work. So when we put tax in, I'll help cover your first year's taxes.
I don't take a PFD now, so I'm fine.
So
I'll pay it. But that's not. I mean, think about Western Alaska, right? Yeah. We're taking money out of the hands of the individuals who live in Bush, Alaska. We're taking money out of the hands of people who live in Fairbanks.
If you cut the dividend, yeah, and that's one of my points. I think as we look at a solution here, look, most of us in this room today could live without our dividend, or a greatly reduced dividend, or pay taxes. As I look out, the demographics here are not the lower income. So I think as Alaskans trying to figure out what's a fair system, we have to keep in mind what it's going to do, not so much to those of us who can afford it, but what it's going to do, like you say, Western Alaska and others who are not in a position to contribute as much to the economy as some of us. It's to me, that's an important value that we have to remember in the state. So, getting off the soapbox and getting to my notes, I feel this is a little bit of memory lane here. 14 years ago when I worked for the Department of Revenue, and we were dealing with fiscal gap and fiscal crisis and doing town hall meetings, I was introduced, it was a Juneau chamber meeting, I believe, and I was introduced as Dr. Deficit, telling people we're going broke, you gotta do something, gotta have taxes, gotta spend permanent fund earnings. So it's nice nothing's changed because I can just use the same notes and the same slides I had from 15 years ago, update some of the numbers. Addressing the gas line project, Pat Pitney raised it, Brad mentioned it. I mean, I'll give you my numbers. If the project goes ahead, earliest 2025, you see cash flow to the state. My numbers, state gets maybe $1.2 billion a year. And that depends on market conditions, depends on the cost of the project. So I guess the message here, yes, the LNG project helps pay for services, helps fill the gap, but it is not oil, It's just not as valuable a commodity. The BTU isn't as dense. It takes more money to move it to market. So keep in mind the gas line, and Brad's right, it's an important part in piecing this together, but in and of itself, it is not going to solve our problem. I think one thing we need to keep in mind, or many things we need to keep in mind in the gas line, one, Pat mentioned, the state as an investor, as an owner in this project, is going to have to borrow billions of dollars. It is going to be really hard to get someone to loan you billions of dollars when they read in the paper that you can't pay your bills. I mean, you can pay them, but you really don't have a way 2, 3, 4 years out. It's tough to borrow money where you have to say, look, I know I'm sort of in debt and running on credit cards and things aren't looking good, but if you loan me $10 billion, I promise I'll pay it back. I was in London last week presenting at an LNG conference, and much of the discussion then was financing. The LNG market right now is in the pits. It's oversupplied. Economics are not looking good. So financing is an important issue. You've got to have a good balance sheet to walk into investors and lenders and convince them to give you money. So we want a gas line. The governor wants a gas line. All Alaskans, most Alaskans want a gas line. You're going to be hard-pressed to participate as a partner and raise money unless we get our fiscal house in order. So it's one point I want to make about the gas line. The other point is, as Alaskans look at the benefit of the LNG project, it's not just that $1.2 billion, give or take, that would go into the general fund. I think we need to realize that if the North Slope producers make a commitment of tens of billions of dollars to build and operate a natural gas project which will last 30, 40, 50 years, that's a commensurate commitment to keep North Slope oil operations going too. You don't get one without the other. Having a gas line project makes oil operations up there more attractive to investors because now they can sell both commodities that come out of the ground. So long term, having a gas line, yes, it needs some money, but it also enhances the odds that the North Slope will continue to pump oil and provide money to the Treasury for decades to come. And as we know, oil is where the real money is. A couple other points I want to make, and Pat raised this about the state's motor fuel tax. Lowest in the nation, 1/3 the national average. Alaska's motor fuel tax rate is the same it was just about when Eisenhower was president. And I mentioned that to some groups, and I realize, not this group as I look out, but many groups, they don't know who Eisenhower was. So I tell them, well, it was 2 presidents before Nixon. And they sort of got that down a little bit. Speaking of motor fuel taxes, North Dakota surpassed Alaska. It produces 1.2 million barrels of oil a day. And we like to say, oh, if we could just be like North Dakota. They got all this oil. You know, North Dakota has an income tax. North Dakota has a heavy sales tax. Not just 5%, but there's no cap. You buy a $30,000 pickup truck in North Dakota, you pay $1,500 in sales tax. And North Dakota has a lot of oil. They're saving most of it with the requirement that they start spending it, kind of a modified % of market value, but by 2017, they need to start drawing it down. A couple years ago, North Dakotans were presented with a ballot initiative to substantially cut property taxes, using the oil money to replace it. They defeated it. Huge margin. They defeated it. So part of me wants to be like North Dakota, where we're willing to tax ourselves to pay for public services. Part of me doesn't want to be like North Dakota, where they say produce the oil, flare the gas because it's worthless, and the hell with it. I mean, at one point, they were flaring 1/3 of the gas that was produced in North Dakota. So that part I find embarrassing. A couple other points, and this gets to the issue Craig had mentioned, advice for municipalities, or I don't know if even advice is the right word, caution. I think the municipalities need to focus on what they can control, and I'm talking about revenues here. As state finances get tight and tighter, and a lot of the burden's going to be passed down to the municipalities. I think municipalities need to look at their property taxes, need to look at their sales taxes, need to look at the exemptions they can no longer afford, need to look at economic activity that they're not able to capture something from, be it online shopping. Look at how the world's changed and look at what you may need to change in your taxes, because the help is not going to be able to come from the state. It's not going to come from the feds. And as the state looks at a broad-based tax, I would think the municipalities would rather collect the money and keep it for themselves than wait for the state to collect it and send some back. So my advice, I guess, is taxes for municipalities. At least then you can control it. One last point, the state has been bailed out many times in the past, high oil prices. I think people need to realize the Constitutional Budget Reserve, or CBRF, for those of us who are addicted to acronyms, that was established and funded when the state collected the IOUs on the big oil and gas tax cases. And those IOUs are what paid for government in the 1990s. There was that period, 93 through 2003. Most of the years, we balanced the budget with the Constitutional Budget Reserve. Some year, 40% of the budget came from that budget reserve. Those IOUs have been collected. It is a non-replenishing fund. The CBRF, Constitutional Budget Reserve, got some more money when the state went, in my opinion, to an exceedingly aggressive oil tax structure. We got a little carried away. Fortunately for our bank account, that was when oil $100, $120 a barrel, so we replenished the budget reserve with the windfall profits that came off that tax. That tax feature has been eliminated. Whether you like it or not, it is gone. So what's in that CBR has to last us. We're not going to get billions more to put back in. So as Pat Pitney explained, you got to look at that CBR, stretch it out long enough, figure out something where you don't draw it down so low that you're in jeopardy of being able to cover your expenses. So we're going to have to pay taxes. It won't kill us. And with that,
well, we clearly have some weighty issues to consider here tonight, but I'll admit that my primary concern at the moment is, during my remarks, scooting my chair 2 inches to the right and falling off the stage. Should that happen, call 911 and proceed without me, please. But good evening, everyone. Let me first start by offering my thanks to Pat Pitney for taking the helm of OMB at what promises to be a really challenging, difficult period for the state. And Pat will play a key role in keeping Alaskans informed about our budget situation. And I think we're lucky to have Pat in that position. We got to know her in her position with the University of Alaska and found her to be incredibly professional, incredibly competent, and again, I think we're lucky to have Pat help us through this process. So thank you for your public service, Pat. Appreciate that. I have 3 points I'd like to quickly make, some of which have already been touched on by other panelists here, and one is let's be very, very mindful of the economic impacts of the measures that we employ to deal with our budget situation. I think there's some reasonable likelihood that over the next 10 to 15 years, maybe sooner, maybe later, we're likely to have both the state sales tax, a state income tax, we'll be spending some permanent fund earnings, all overlain on a streamlined state government infrastructure of some kind. So if we move down that path, let's make sure that we're strategic and thoughtful about how we do that. As Gregg has noted, that we've got some tough sledding in front of us economically. We have the potential to make it worse if we're not careful with how we proceed. Do we understand what the economic impacts are, the statewide economic impacts are of transferring money from individuals to state government? Do we understand the economic consequences of sales taxes? What are the economic impacts in communities that already have sales taxes, like Juneau, 5% sales tax if we had a 3% statewide? What does that mean for local business? Does that push more business to online sales at the expense of local business people? We need to be mindful of what the consequences to the economy might be as we think about these things. Let's be mindful about how we can have non-residents help us through this effort. 15% of all the wages paid in Alaska are paid to non-residents. That's $2.4 billion. So if we think about income taxes, let's think about how to get the most of that. And of course, non-residents spend millions and millions in Alaska purchasing goods and services, so there's a sales tax component there. Let's just be thinking about how we can ease the burden on Alaskans and have non-residents share in that burden. We've already heard about the concerns of sort of kicking the can down the road and what that might mean for our business, our investment climate. We do seriously risk losing investor confidence if we don't address this issue relatively expeditiously. And finally, let's be careful about creating an environment for other industries, other businesses who are looking to invest in our state. Let's be thoughtful about whatever new taxes we might be thinking about overlaying on our other key industries in the state. So, point one, let's be mindful about the economic impacts of the measures that we intend to employ to balance our budget. Another point I'd like to make is I think we need to help inform the state that the economic impact of cutting the state budget is not just a Juneau issue. Clearly, we have a lot at stake here. There's 4,300 state workers in Juneau. They earn $250 million in annual wages. That's a quarter of our economy directly. If you roll in the indirect and induced effects of those jobs and that income, it's easily a third of our economy, probably creeping up to 40% if you roll in the other ways that state money flows through the economy. So we have a lot at stake, no doubt about that. But Juneau has only 15% of all state government employment. There's almost 26,000 Alaskans on state payrolls, 4,300 in Juneau. There's 10,000 state workers in Anchorage, 1,500 in Matsu, and state workers are scattered all across the state. So as we think about how we're going to streamline state government, make it more efficient, let's help the state understand that the economic consequences of that are statewide. Anchorage in particular, with its 10 or 11,000 people on the state payroll, they're going to take a big hit from force reductions at J-Bear. Anchorage is headquarters for for the oil companies that are active in Alaska, all the business and professional services that support the oil and gas industry. That's an economy that's going to take a hit going over the next several years. State budget-related cuts will exacerbate what will already prove to be a difficult situation. And finally, I think maybe we, as a state, we ought to take a page out of Juneau's playbook and start thinking about economic development planning and actions. As Gregg noted, we have a history of big projects. The next big project is going to save us, so let's focus all of our time and energy on that. Juneau, which has recognized its dependence on the oil industry, on state government, spent a lot of time and money in some economic development activity, the Juneau Economic Plan, which our firm helped with, looking at all of the ways that the community collectively can induce some economic diversification, enhance some stability in the economy, looking at not one big thing, but a lot of different things that can help strengthen the economy. Valdez is another community that's really dependent on the oil and gas industry, almost entirely dependent, certainly from a funding local government perspective, really a microcosm for Alaska in that respect. They can see the handwriting on the wall and recognize that probably within a decade, they will, out of necessity, they will have to have some other economic foundation. So they've initiated very aggressive economic development planning and identifying some specific initiatives to help move in the right direction. These things don't happen overnight. This is a very, very long-term process to steer this economic ship to where we want to go. And it's not about big projects. It's about small baby steps in the right direction that you can sustain. Alaska did move in this direction a few years back with a project called Alaska Forward, a statewide effort to gather people together to focus on some economic development initiatives. That effort didn't have quite the right structure, quite the right participation to be sustainable, but it was the right idea. So I think we need to be thinking about what does Alaska's economy look like in 20 years? Are we doing all we can to support and nurture the seafood industry, the mining industry, the tourism industry, and other sectors of the economy? Clearly, the oil and gas industry will continue to play a really very important role in our economy, but let's envision an economy that's better balanced, not just in terms of our capacity to fund state government, but overall in terms of a source of jobs and income for Alaskans. So my 3 points: let's be mindful of the economic consequences of budget balancing measures. Let's remind the state that budget cuts are not just about Juneau. I spend a lot of time in Anchorage, and it's always about those people in Juneau. We gotta get control. We gotta cut. This is a statewide issue. The economic impacts are statewide. And finally, let's start thinking about what we want our economy to look like in 10 years, 15 years, or 20 years. Thank you.
Working on it. There we go. First of all, it's good to see that you're all in agreement on most of these issues. One of the other sub-questions that I would like to go back to, and Jim has touched on it, but I'd like to go back to Gregg and kind of work down. We've all spoken about the issues on a statewide basis, clearly an issue, but Southeast Alaska has some regional differences from the infrastructure in the rest of the state. How do you see Southeast Alaska, irrespective of state employment in Juneau, how do you see things for Southeast versus the rest of the state?
Well, the bright spot, of course, in recent years has been tourism and visitor industry. To summarize, I guess you'd say the timber industry is moribund. I don't see that changing dramatically. There may be some small-scale development. The fisheries has been doing quite well, but with the strength of the dollar and our dependence on exports, that doesn't look too promising right now. I think Jim probably has better perspective on that than I do, but we are, of course, in Juneau, we've driven the economy in Southeast has been largely driven by Juneau. If you look at the individual communities, Ketchikan is doing quite well. My son now lives in Ketchikan, and by golly, things are popping there with the shipyard, which is heavily subsidized by the state. But tourism, if that continues, that'd be great. But I think tourism has a problem with a strong dollar as well, because it's cheaper for Americans to vacation elsewhere now, and it's more expensive for foreigners to come and take those cruise ships to Alaska. So I think Southeast Alaska has a difficult situation. The Forest Service is one big uncertainty. They've been trying to transition to a second growth kind of based operation, and I don't see much progress there, but I do see the Forest Service remains the largest forest products industry in the state, in Southeast. So I'd like to kick it to Jim about fisheries. I don't know about what's going on in Southeast now in terms of the strong dollar and so forth.
The industry is clearly suffering from strong dollar. The harvests have been great. Values have not been as great. So you're right. There's some weakness there. General information about the economy. The latest data from the Department of Labor is estimates through July of 2015. As a region, we're down about 400 jobs over where we were last year. At the same time, estimates subject to change, but we're in a decline mode. Most of that actually is state government employment in the region, which totals about 5,000, with obviously most of that in Juneau, is down about 300 or 350 positions from July 15 versus July 14.
Brad?
To me, I think the coming focus of Southeast and frankly the coming focus of other regions in the state also is local, more local. The state government is not going to be what it's been for a long period. It shouldn't have been as much as it's been. We were spending well above sustainable levels. It's not going to be what it's been into the foreseeable future. And I think that's going to put more burden on the localities, more burden to help support the school system, more burden to help support the local economy, more burden to help come up with ideas on how to generate the local economy as opposed to state subsidized shipyards, more things that can be done locally. And when you think about that, I mean, I appreciate Larry's point with respect to taxes, but when you think about that, that means that the local economies are going to have to sort of generate revenue, additional revenue for themselves in order to meet those additional burdens. They're going to have to generate some additional revenue to keep, as state funding to schools goes down, to keep the schools going. They're going to have to generate additional local revenue in order to support economic districts to try to attract industry or try to attract commercial. And a lot of that is through local sales taxes, so local property taxes. And when you think about the state then, grabbing its share through taxes, that just increases the tax burden even more and frankly reduces the ability of the localities to meet their increased obligations. So I think to me, the message that is important for Southeast and the message that's important and indeed for the rest of the state is think local. How are we going to solve these things locally? Because the state's not going to be riding over the hill to build the next school, to build the next AstroTurf football field, to build the next UAA athletic arena, to build the next state crime lab. They're just not going to be riding over the hill to do that. We're going to have to do that locally. Same thing in Anchorage. Mayor, I'm getting ahead of myself, aren't I?
He will be so happy to hear that.
I supported Ethan 4 years ago. It's just still in my mind. Mayor Berkowitz is having to confront the same thing there. And Anchorage is going to have to start talking about sales taxes again. They hate that discussion. If this shows up in the Alaska Dispatch in Anchorage, I'm probably going to be run out of town. But they're going to have to think about helping to support their local economy because the state's not going to be there.
Thank you. Larry.
One additional point that we should, a point of exposure for Southeast Alaska in particular is the Alaska Marine Highway System. It's big budget problems, the fleet is aging, whether we have the political support statewide to keep, the Marine Highway accounts for half of the state operating maintenance budget. It's a key piece of infrastructure for our smaller rural communities in particular. So that's a point that concerns me, particularly looking forward for Southeast Alaska. All yours.
I was going to say, I'm going to agree with Gregg and Brad on a couple things. One is I think Southeast I agree with Brad on several things.
Would you tell Pat that?
I think Southeast in particular is going to have to think local. The state's not going to come to the rescue. The feds aren't going to come to the rescue. And like Gregg said earlier, I think communities are going to have to look at not building anything new. You just can't afford it. Deal with what you've got. I also agree with Gregg. I think it's not going to take 10 or 15 years. I think 2 or 3 years you will see a noticeable drop in Alaska's population. So you've got to think about every decision you make in terms of new schools or remodeling schools, or at some point, and we've had other communities in the state, closing schools. So I guess think local, don't build new, figure out what you can do within your own economy. And I think one good thing about Southeast is Anchorage has really built up over the last 10, 20 years, so it's got much further to fall. Well, that is sort of a good way of looking at it. I look at Anchorage, they're building chain stores I've never even heard of. And I don't know where the hell all the money's coming from that people are shopping. They have 2 Olive Gardens in Anchorage, and one of them you got to wait an hour and a half to get into. It's not that good. So maybe one of them's going to have to close. We don't have an Olive Garden in Juneau, so maybe that makes us better off. I know the breadsticks are free, but you got to order something to get the breadsticks.
You know, I think at this moment, since we got all 4 of them almost in agreement, let's take a break. First of all, I want to thank Director Pitney for not being asked any further questions yet, so don't go away. And certainly thanks to Jim, Larry, Brad, Greg. We're going to take a 15-minute break. When we're going to come back, we will have the community panel, and they will start asking questions to our group. So let's give a round of applause to the panel and to Pat Pitney.